It's a new trading week, and we did get new record highs for the Nasdaq, but the Dow and S&P 500 are seeing some pressure as we kick off a very busy week. Joining me now is Peter Cardillo for Standard Financial. Peter, great to have you here today.
Good to be back.
Well, it's a busy week this week with economic data, central banks, as well as political concerns from Washington, D.C. being considered. So given everything that's on the economic calendar, not mentioning earnings as well, what are you paying attention to and why?
Well, the market's holding up pretty good today. I mean, if you look at the averages, we were down about 80, 90 points at the beginning with the Dow, and then, of course, we have reversed that now, and, of course, some of the indices are up. I think it's just, a question of individual stocks, and, we had two stocks that were under pressure today, General Motors, due to a downgrade, and of course we had Merck down. So two Dow stocks that weighed. But in general, the market continues not to really focus on the negative.
And as we look at the economic calendar for the rest of this week, we do have the Fed rate announcement as well as BOJ and BOE. And when we look at the central banks, of course, the next Fed chair appointment is widely anticipated. But the Bank of England is also expected to raise rates for the first time in over a decade. So how do you see that affecting the FX markets?
Well, I don't think the hike in England, if it does happen, I don't think that it'll affect the markets. It's pretty much well telegraphed, so I don't think it's going to be a problem. In terms of a new Fed chief, it does look like that Powell is going to be head of the Federal Reserve. He's not going to the more hawkish individual, but someone who's more or less on the same line as Yellen. So I don't think that's going to make much of a difference. In terms of the Fed raising rates this month, no, I don't see that happening. I do see a hawkish statement, which will indicate a rate hike in December. The economy is just doing quite nicely, and of course there's still absence of inflation for now.
And last but not least, before I wrap it up, I do want to talk about the U.S. jobs report as well as oil prices. We did see the hurricane effects on the PC as well as personal income and spending today, given that gas prices were higher and people were spending more in the aftermath of both hurricanes. So we'll also expect a bounce back in non-farm payrolls for the latest month. So what do you expect, and where do you see oil going given today's elevated levels?
Well, we'll address the employment data first. I'm looking for a bounce of about 165,000 non-farms, probably with the total rate of unemployment basically being flat this month. But I do expect to see a fairly sizable increase in work week wages, and we could see that in excess of maybe 20 cents. As far as oil prices are concerned, well, we're not that far away from the magic number of 55 that we spoke a lot for a long time. But I do believe that we're probably going to see a new trading range somewhere between 52.5, 55. And then as we move into the last month of the year, we could be seeing $60. And more importantly is that demand is solid, and that's going to pick up because the economy, the global economy, is picking up. And you know what? We're going to see more demand here in the United States.
Okay, Peter, well, thank you so much for joining me on Monday, and I look forward to speaking to you after the jobs report on Friday.
Thank you.